Hello, this is Owen Katongo Kabanda, your management and leadership advisor. So we had a question from someone asking, how do you actually go about doing labor costing for your institution? So these are things that we have covered in some topics, and also we do a lot of talking with people who come to attend the workshops that we conduct. Basically, when you are a business, you want to sit down and ask yourself, what exactly are you spending on your employees? Remember, you work out your figures around your production costs, how much you're spending on the the things that you're using for your products, for you to really produce the I don't know, whatever you're offering to your customers. Now, that is just one side. On the labor side, you want to now sit down and ask yourself simple questions relating to how much you are spending. And that is, sit down and start looking at the first thing is the salary that you're paying the employees. So you have, employees in different categories. You have your directors, your managers, your seniors, the officers, all the way to the lowest level employee. And then you say, in a month, how much am I spending on each employee? So you work out the number one, the full salary. The full salary, you are looking at the basic pay, the housing allowance, the transport allowance, lunch allowance, and any other allowances that you may be paying in line with the country in which you're operating, the laws that might be applicable. So when you work out the full amount you're paying, that gives you an idea of the full salary that you're supposed to pay every month. Now, from the full pay, which is also known as a gross pay, you want to be very clear that within that full pay, you have highlighted what is the basic pay. In the past, there have been a lot of discussions, especially in Zambia, where people will put the salary and they'll call it clean pay or everything grossed up. But that starts to create a confusion with regards to what exactly is the full pay and what is the basic pay. So it's important that you separate these two, because the basic is anything that is the salary the employee gets before all allowances are added. And then when you add the basic plus the allowances, it gives you now the full pay. Now, why are we talking about this and why is it important? Look, to avoid confusing yourself and having unnecessary challenges, especially when it comes to calculating things that there are certain calculations that we'll talk about that are linked to the basic pay. If you have not separated these two, it means the formula you're going to be putting it to be picking the actual gross pay. So there are calculations like gratuity or leave days or any of such kind of calculations. They will be based on the basic pay depending on the conditions of service that are applicable in your company. So that's why when we talk about the salary, we always emphasize that, make it very clear. And again, these are things that a lot of companies are helped with by consultants. And once it's done, you should be good to go. You have a column that talks about the full pay. In the next column, what we do look at is the basic pay. You also want to break down the basic pay each employee, because you're going to calculate for each employee. It's not just saying, no, I think I'm paying this. It should be based on the actual employees you have or the employees you intend to have. So once you have that, then you now look at the cost. Remember, it's the cost for the employer. That's what we are looking at, not the cost on the side of the employee, but what it is costing you as the employer. So then you start we talked about the full pay, we've talked about the basic pay. You then want to have a column where you're now calculating the pension scheme contributions. Now, depending on the country in which you're operating, you may have, for instance, in Zambia, you have the National Pension Scheme Authority, NAPSA, which charges about 5%. Now, that 5% doesn't go all the way to high amounts. There is a ceiling. So you want to check every year that you're operating in a particular financial year, you check the ceiling for NAPSA so that you don't pay more than you need to pay in terms of your contributions as an employer. So you calculate again the NAPSA contribution as an employer for each of your employees. And then from there, you go to calculating the national health insurance schemes. Again, if you're in Zambia, you have NIMA. You calculate that is around 1% of the basic pay. And remember, this is why we are saying that in the first place that it's important that you separate the gross pay or your full pay from the basic pay, because certain calculations are actually linked to the basic pay. So if you have just put everything together, it starts to create unnecessary problems for you. So when you calculate the National Pension Scheme Authority contributions, it will also give you how much you pay. Again, the percentages or ratios are dependent on the country in which you are operating. Then you go to look at the contributions that you have to make with regards to, if you have, let's say, the private pension scheme. Again, calculate what you do contribute as the employer. Then if you're operating in Zambia, you have to also work out the skills levy. Now, skills levy is again calculated on the total earnings, that is your gross salaries. I hope we are now understanding why it's important to have all these salaries separated, because if you don't get it right, you find that you over budgeting, or you budget less, and it's going to spend, and when it comes to spending, you spend more. So you work out the skills levy. Skills levy again is paid to, for instance, in Zambia, you're making those contributions to Zambia Revenue Authority at the end of each month. So from the skills levy, you also want to calculate and make a provision for leave. Now, remember, I mentioned that you have to have your breakdowns per employee. So what happens is that when it comes to leave provision, you are now looking at each employee, and in each category, what is it that they're entitled to? All right. So now, when we say what are they entitled to, it may look like, oh, what are we talking about? By law, for instance, if you're in Zambia, you find that the law requires you as an employer to give two leave days for each month. Now, in other companies, they give 2.1, 2.5, or 3 leave days, or 4, depending on your conditions of service. And that's why it's important that whenever you are doing labor costing, you don't just dream up figures. No, because the law says 2, so you multiply by 2 in each month. No, look at what the conditions of service in a particular institution are, because that will give you clear guidance on what exactly you need to put in your formulas. Otherwise, you'll be doing wrong calculations. You remember, it's garbage in, garbage out. So when you look at the leave provisions, you're now asking yourself, what is each of these employees entitled to? Or you could sometimes get the categories. That's why for bigger companies where you have job grades, it becomes easy, because you know that your directors, they earn this much in terms of the leave days, the managers this much, the seniors, the officers, up to the lowest level employee. You can easily work out the formula based on the job grade. If you don't have that, you want to make sure that you have checked the provisions in each of the employees' contracts, or the conditions of service that may be applicable. So the leave provision also is calculated based on the basic pay or the full pay, depending on the conditions of service. Of course, I know in Zambia we have the employment code, and the formula was based on the full pay. However, there is also at the time of shooting this video, most likely in future things will change, but at the time of shooting this video, there was SI 48 of 2020, which of course made an exemption to section 36 and section 37 of the employment code, which especially section 37, which talks about the formula of calculating your leave on the full pay. So this is why we are still saying you calculate still based on your basic pay. Now, from there, you also want to work out, the gratuity. How much are you going to be paying gratuity to employees if they're entitled, depending on your contracts? Again, for instance, in Zambia, again, we're giving an example of Zambia. You have gratuity being paid for any long-term contract. And the long-term contract is any contract that is more than 2 years. More than 12 months, sorry. What that means is that if your employees are entitled to gratuity, you want to also calculate this gratuity. So for instance, in Zambia, you have 25% of the basic. Remember, again, we are going back to why it's important the salary you're giving to employees to be broken down. So 25% of the basic pay per month is the equivalent of the gratuity that you are providing for the employees. So now what this means is that, again, 25% is the minimum the law has provided. This is why we keep on saying, check the contracts of the employees or the conditions of service. If the contract or the conditions provide for 30% of the basic, or 35% or 40% of the basic, depending on the company or the institution, you want to pick that specific rate and apply it on your formulas, in your calculations. Then you also want to now calculate for workers' compensation. Remember, every year you need to apply and pay for workers' compensation. In case there's an accident, you want to ensure that you have made a provision and you have actually paid to workers' compensation for this. So that cost also should be loaded. Now, I've talked about the major things that you load on your calculations for labor cost. That is your full salary, your NAPSA, and then your NEMA. You can also, you've also calculated for gratuity, your leave days, skills levy, and so on. Now, remember, we receive a lot of questions around personal levy. Skills levy and personal levy are two different things, okay? The skills levy is what the employer pays to through ZRA. Personal levy is paid to the council, in which in the place where you are operating. Now, that personal levy is paid by the employee, so you cannot include it in your calculation for labor cost, because you are not the one who is paying as the employer. And actually, it's a small amount. It's about 15 kwacha, and at the time of shooting this video. So you find that in other places they split it into two. So you have 7 kwacha 15 kwe being paid in the first half of the year, and then the 7 kwacha 15 kwe being paid in the last half of the year. Now that is a cost that sits on the employee, so you cannot put it on your labor costing. So other costs that you could include is the cost for medicals. There are companies on top of your NEMA, which is a mandatory by law. You could also have private medical schemes. You could have so many other things, including maybe your savings schemes. You want to calculate for that. You also want to calculate for any other allowances or things that you're giving to employees that will have an impact on your budget. So once you sit down and work out all these things, you then you make sure that you are capturing every employee that you have in your institution, and you have your totals at the bottom there. But also you want to now see that the costs that you have calculated, these are costs per month. Then you want to now multiply that by 12 months. When you multiply by 12 months, that now gives you your annual labor cost. Now, this is just one part. You have just calculated your labor cost, but then you want now to move to the next level, which is where now decisions start to be made in terms of the business. You want to look at the ratios. Now, we will talk about the key ratios, and one of the key ratios that we look at, for instance, is labor. Depending on the industry that you're operating in, you may not want to spend over 50% of your earnings, or over 65% of your earnings. Normally, you have between 10 and 25% of your revenue being spent on labor, or others will stretch it to 35. But again, it depends on your industry and your sector, and you also have to look at what the your shareholders have the targets they have given you, depending on the industry that you're operating in, and even the type of institution that you're running. So you always want to make sure that the ratios that you're running in terms of labor, they are sustainable. Because if you are going to be spending on labor everything that you are earning, then that business cannot start growing. It becomes a huge challenge for that business to grow. Otherwise, what is important is, once you manage your labor, again, we can talk about the various ways in which you can manage your labor, including, do you want to reduce the number of people? You can also work out, a recruitment plan. Again, these are things that a lot of institutions are helped with by consultants. Basically, we now sit around and say, okay, how is your structure looking? When can people actually come in, so that your annual labor costs are not really eating up much of your revenue, because at the end of the day you want to run a business as a business, and it's important that you're looking at all the numbers so that the numbers can make sense and can make businesses. Otherwise, this is something that we thought we could share with you regarding labor costing and why this is very important, especially you want to run a profitable business. It might be another issue for people running institutions that are not focused on profits, but it's something that almost every institution should start looking at, because it's important that there's sustainability to any business. Otherwise, feel free to follow us, and make sure you click on the subscribe button and follow us even on all the other social media platforms. We always appreciate your feedback. Please comment and like. We always appreciate the support you give us. Once again, this is Owen Katongo Kabanda, your management and leadership advisor, wishing you the best in everything that you're doing.